Hey there, happy Tuesday, and welcome to The Hash. I'm Zack Seward. I am joined by Naomi Brockwell, Will Foxley, Christine Kim, and David Z. Morris. We have all sorts of good stuff for you today. It's all about the latest in crypto news and culture, and we are going to tackle it with zest and zeal. David Morris, talk to us about the inflation numbers that came out this morning and why crypto people are watching them closely.
Yeah, so we had new monthly inflation numbers this morning, and they were higher than expected. Inflation year over year was 5.4% in June, which was a little bit above the projection, 4.8%. And we've been talking about inflation for a lot of reasons. But what was particularly surprising this time around was these numbers came out and Treasury yields have not moved this morning. And what that means, usually Treasury yields, the percentage return that you get on a U.S. Treasury bond, moves in accordance with expectations around inflation. And at least for professional investors and institutions, the fact that those haven't really changed this morning seems to suggest that they still believe, even after today's numbers, that inflation that's happening right now is a short-term phenomenon. It's getting a little bit harder to hold up that argument, although there are some indicators that support it in the underlying numbers. But the question that comes to mind now is, if you disagree with that, what are your possible moves as an investor? And they might include buying Bitcoin or gold or things like that can act as inflation hedges. So it's a little surprising to see those numbers and not so much reaction from at least mainstream investors. And I guess the discussion is where we feel about that, how we feel about that. I'm sorry, my cat is going insane in the background. But how we feel about inflation and what we think people should be doing as opposed to what the mainstream is doing.
Yeah, I'll jump in. So it's interesting that, we're waiting to hear from Jerome Powell about his thoughts on all of this. So far, he's basically been saying, this is transitory. This is just a momentary thing, and then everything will go back to normal. And these reports that keep coming out seem to suggest that this is not going to be the case. We are going to have inflation that is here to stay. And, you had the Sarah House, who's a senior economist for Wells Fargo. She reiterated this. She says that inflation pressures remain more acute than appreciated and going to be with us for a longer period. And she also said that we're seeing areas where there's going to be ongoing inflationary pressure even after we get past some of those acute price hikes in a handful of sectors. So it's I think that diversification is really important right now, making sure that you don't have all the money you own as cash reserves in a bank account, because I think that a lot of people are going to get hurt from this. So different assets, a lot of people are looking to cryptocurrency. Brian Brooks says if you don't have Bitcoin in your portfolio, you are missing out on diversification, and says that these days it seems like a good play, and obviously he's not giving investment advice, but it seems like a good play to have like a single digit percentage in your portfolio of that. I mean, you look at inflation numbers. Sorry, go ahead, David.
Yeah, just to jump in real quick on that specific point, there is now a guy named author, I'm forgetting his first name, a Bloomberg opinion columnist, pulled together some numbers. And Bitcoin, especially in the last year or so, has really been correlated with interest rates. So if there's an expectation that in response to rising inflation, interest rates might go up sooner than expected, that's also looks like a good bet on Bitcoin. Sorry to jump in, Naomi. Go ahead.
No, this is great. I'll throw to Christine and then I'll hop back in.
Also, an alternative to Bitcoin that I've been noticing among institutional investors is the expectation that if interest rates rise, Americans won't be able to buy homes. They'll have to rent their homes as mortgage costs rise. So I've also read that major institutional buyers are starting to purchase residential properties. So not so much office towers, hotels, or retail spaces, but just single family homes, in the expectation that they'll be able to hedge their wealth in that way. So obviously this is also causing a lot of, I guess, angst and anger among millennial populations. And there's definitely figures coming out showing that big name companies like Goldman Sachs have provided millions of dollars worth of credit line to these real estate investment firms to fund the building of homes to rent, not homes to buy.
Yeah.
Yeah,
And
it's
that,
just
for obvious reasons, people getting mad. Sorry, Naomi, go ahead.
No, go ahead, David.
Well, so just to jump in with one more data point, and then you can follow me. But those commodities are, whether it's commodities or hard assets like real estate, those are also good inflation hedges. One point related to commodities, and to sort of talk about the other side of the argument here, there are a couple of signals that maybe we'll see lower inflation next month that are pretty solid. So one is that wholesale auto prices actually dropped this month, and those used car prices are about a third of the CPI growth that we're seeing. So retail prices lag wholesale. So that's actually an indicator of one part of the growth that's going to go down next month. We can be pretty certain of. Lumber is also declining pretty sharply. So those are trends in commodities that are going anti-inflationary. But Naomi, you had something.
Yeah, I just wanted to continue on from Christine's point, because it's such a great point when you look at all of these externalities that occur when you have centrally planned government, when you have central banks, organizing the economy, fixing the price of money. Price fixes are never good, and interest rates, when the government sets short-term interest rates, they're literally fixing the price of money. And so you have all of these extended consequences that go far and wide. We've only talked about a few of them. Christine talked about something that is just like a few steps away, that you start to see all these things happening with housing that we may not have predicted. And it's just, there's so much damage that occurs when people are like, oh, well, we're going to print X amount of money, we're going to inflate the money supply. And, I think that's why so many people are proponents of Bitcoin, because you don't have these people determining, the price of money. You just have algorithms, you have mathematics determining this, and it's better than an elite few capturing the economy and determining all kinds of things for everyone. But let's change track here. We're going to be moving to more money raising and to the world of DeFi, which is exciting. Zach, what's going on there?
That's right. Every raise is a story of a problem seeking to be solved, and this is a story about a DEX called Clipper. It's from an outfit called Shipyard. Notice the nautical theme there. The idea here is that this is going to be a DEX for the common man. A lot of DEXs out there, they serve crypto whales, folks who are moving around millions and billions of dollars with wants and regard for fees, and they can do it in a decentralized fashion on decentralized exchanges such as Uniswap or other outlets such as that. This here is something that's aimed squarely at the small fry. And I think this one stands out to me because it comes on the heels of the news about Bullish, which is also has a decentralized exchange aspect to it, but very much catering towards the institutional set. So I think we're starting to see sort of two competing visions for what the future of decentralized exchanges could look like in a much more crypto native future. Will, I saw your hand up. I'm just going to throw this to you for your initial take, and then I definitely want to ask David about some of the reporting that he's done on Bullish after that. But Will, take it away.
I have a question right back for you. So can you explain what do they mean by a DEX for the common man? Uniswap is as simple as you can get.
That's true. So what they're trying to do is they're trying to use various technical solutions to minimize fees as much as possible, right? So they're routing things to provide the lowest fees for smaller trades, for trades under, I think 10,000 was the threshold mentioned in the piece. So there are various technical solutions that other projects in the space are also pursuing that do similar things such as this. So that's the idea behind this. They have a limited pool of liquidity that was seeded by their backers. They can't really support big institutional size trades, but they can support small trades, hopefully with a favorable fee structure. So that's the thesis, at least, Will.
Okay, interesting. Yeah, I'd love to hear David's thoughts on this, because Uniswap, I think, has 3 million contracts or addresses have now interacted with it. So not necessarily 3 million people, but at least addresses, which is by far the most for any DeFi application out there. It's huge growth numbers past anything else, and it's so simple. So I'm just curious to see how anyone plans getting around that moat. But David, your thoughts?
It's sort of it's the interesting thing, right? We asked this question: do we need more centralized exchanges? Do we need more decentralized exchanges? And investors and entrepreneurs, at least, see room in this market to innovate. And I think that's what we're seeing. I do want to throw this to David, because I think it is interesting to juxtapose this idea versus the idea put forth by Bullish on the more institutional bent. So David, what do you got?
Yeah, I would actually throw out another question myself, which is, I don't know if this DEX clipper is operational yet, or if we've read anything about their plans for the front end, because that's always my question with DEXs is how are people going to interact with it? What's the gateway? What's the on-ramp? If it's a DEX for the people, it has to be easy to use. So, I mean, as much as the liquidity thing and the trading caps and those things are interesting, I think a lot of that onboarding is key too. But to move on to bullish as the juxtaposition. So for people who saw it, I'm going to try not to speak too freely here, but bullish is this non-existent exchange that is apparently worth $9 billion. It was announced yesterday that they were going to try and SPAC this thing, a special purpose acquisition company, a reverse merger using an already listed company. Backers include Peter Thiel and I believe Novogratz. But most of the money seems to be coming from Block One, which is the company behind EOS, although they will desperately deny that if you accuse them of being responsible. And the contrast is that they've now got, I believe, $6 billion worth of liquidity, including a lot of Bitcoin that EOS got from their illegal ICO. So, take that for what it's worth. But it's just another centralized exchange. I mean, they've done some signaling that we're going to write receipts to the EOS blockchain, which, as I wrote about yesterday, seems a little bit like a pump for EOS more than any benefit to the actual users of the exchange. But the real question is, we have CoinDesk, we have Kraken, we have Gemini. I mean, rattle off more names. There are other big centralized exchanges in the US, and not all of them are doing well, even that have been around for years. So, as far as an investment in an exchange, this one looks kind of questionable. And I really, in general, am a big fan of projects that start out small and that prove that they have an actual place in the marketplace before they ask for $9 billion. Naomi, I saw something, but I think we might be done. I'm not sure.
Yeah, I just want to ask, what chain is this new DEX on?
I think it's on Ethereum, but they route things through like 1inch, which is also on Binance Smart Chain.
So it's just
and a bunch
another
of other
Ethereum
networks.
walled garden DEX. I mean, Uniswap, I agree with Will. Like they kind of have that market. We've already got so many knockoffs of that. I don't see, like, if this were more competition for cross-chain DEXs, that would be more interesting to me than something that's just another Ethereum asset exchange with Ethereum asset. I definitely think we need to move away from that as a crypto space, given that there are so many projects that are moving away from Ethereum itself now. I think cross-chain is definitely going to be the future. But Zack, what have we got coming up after the break?
Well, we're going to dive into decentralized exchanges in the future, that is for sure. But after the break, we have some crypto crime, a caper in the UK involving, I think, $250 million of crypto tied to money laundering. That is a big haul for law enforcement authorities across the pond. Stick with us on the hash. We'll talk about that when we get back. And we hope you're having a great day. All right. Bye.
Hi, everyone, and welcome back to The Hash. We're going to start off this block by talking about some crypto crime, apparently. So British police announced that they have seized almost $250 million in cryptocurrency. Apparently, it is the country's largest capture of this kind, and it's all part of ongoing investigations into money laundering. I mean, I got to throw this to the group, but I'm just going to say, like, there's no information about what kind of cryptocurrency this is. There's no information about what crime syndicate they've gone after, what crimes were actually committed apart from money laundering. Obviously, money laundering is just, malum prohibitum, right? It's just something that is bad because there's a law against it. So there's no information about what they're actually doing that's making anything better for people through this capture. But I'm going to throw it to the group to get your thoughts on all of this. Will, tossing it to you to start off with. Sorry, Zach, I believe your hand went up as well.
I just have a quick question. Is there information on how they seized this, Naomi?
There's no information. It's like some big PR campaign where they're like, look at us doing good things. We got several $1 million. And meanwhile, you have crypto companies raising like $1 billion rounds, you know, like I just feel like it's a drop in the bucket. We don't even know like what actual crimes are committed that, you know, apart from money laundering, which is this vacuous statement that only became like a bad thing in like 1986 in America, where they're like, money laundering's now a crime. And, you know, two people can do the exact same behavior, but one of them may be a money launderer, one of them may not, because it's really ill-defined. And I mean, I have so much beef with this, but sorry, Will, going back to you before I just rant for some more.
I love how you're able to rant with so little information here. It's kind of impressive. Now,
That's why I'm ranting. These things drive me nuts.
Like, what is money laundering in crypto? I think that is what's kind of sticking out to me, because you look at all these exchanges, you can move coins between each other. Is that money laundering because you're swapping assets on a decentralized exchange? Is it money laundering because you were swapping on something like a Tornado Cash, where you're actually like moving the coins around so you end up with the same amount of coins but different coins and they're hard to track? That stuff is never put out and it's never really told what it means. Also, to your point, $250 million, pretty small in comparison to past hauls we've seen, pretty small in comparison to like the daily average volume trading on a lot of exchanges. So I don't know, it just kind of points to like the very tough nature of tracking down crypto and very tough nature of confiscating it, like whether they actually seize the private keys somehow, if they're like on a server, or if they just seize the people who have the knowledge of the private keys. That'd be like important information that should have been in the story, and maybe it'll come out later. Zach, your thoughts?
Yeah, I'm not going to go out here and stand for money laundering, but I am going to say it's really interesting to see how these crypto tracking firms are doing this. And I think that's the real question here, right? Like Colonial Pipeline, there's still a lot of unresolved questions for how that Bitcoin ransom was retrieved. I'd be very interested to know sort of what is the latest and greatest that these firms are using to help enforcement agencies find this crypto and potentially seize it, because I think there's clearly some interesting tricks of the trade that are happening a little bit behind the scenes. So want to learn more there. I think, Christine, I saw your hand up. What's your take on this latest from the UK?
Yeah, I think that it's important to know that regardless of the specific crime, regardless of the specific illicit activity happening, these are like police authorities trying to catch criminals who are breaking the law and who are traditionally like using cash to fund the criminal world. And of course, I think we can all like agree that there's gray areas of what is considered crime and what is not. But on the topic of police authorities now not just tracking how to fight crime through this like black hole of cash, they're trying to use the blockchain, trying to figure out how it works in order to track down these criminals. And to the point of people who take this and run with it and say that, oh, well, you know, Bitcoin is bad because it's just a cryptocurrency for criminals. Like, to that point, I think that there's increasing evidence from folks like Chainalysis to show that of all the transaction volume that cryptocurrencies have, only roughly like 2% of that volume is used for criminal activity. And as more people start to use cryptocurrencies for other reasons outside of crime, outside of breaking the law, the more that cryptocurrencies, Bitcoin, Ethereum gains adoption, the lower that share, like that percentage of transactions that are used for illicit activity, the more that share will go down. And I think we're seeing that. We're seeing that in the 2019 figures, 2020 figures. We're seeing that. But yeah, I'm going to toss it back to you, Naomi, to see if you have more to rant about on this.
Always have more to rant about, don't worry. Well, I just want to push back a little bit on the idea that just because someone has good intentions or they're going after the bad guys, that this is an okay practice. Because that's the sort of thing that justifies the surveillance state. You know, mass surveillance going into everybody's online activity basically renders the Fourth Amendment, you know, obsolete or non-existent in the digital world. You know, like if you look at money laundering and the tactics that law enforcement uses to try to catch people, all this, you also have to talk about, like, is this cost effective? Like, it's reminiscent to me of the war on drugs, right? Which has utterly been lost. It ends up just being a war on people. Like, with going after money laundering, we're told that we need this in order to go after, criminals and terrorists and all of this. But what results have they actually produced from this? And at the same time, it's been a wholesale violation of civil liberties, people's right to financial privacy. So I push back on the whole practice, because I do not see that this is a cost-effective way to be going after criminals. Instead, we should go after actual criminal activity rather than this, vacuous statement that is like, oh, money laundering is also a crime, and it's just so ill-defined. But I believe we have to move on from this. What have we got next? I'm going to throw it back to you, Christine, for our next story.
Yeah, well, it's actually kind of related. We're still going to be talking about government authorities and what they're doing and how they're dealing with crypto. So withdrawals for sterling from Binance, the world's largest cryptocurrency exchange by trade volume, has been suspended yet again for a second time. The move was likely motivated by statements from the UK's financial services regulator, the Financial Conduct Authority, that said that Binance wasn't allowed to undertake regulated activities within its country. This comes after more than half a dozen national regulators besides the UK's Financial Conduct Authority, including Japan's Financial Services Agency, the Ontario Securities Commission in Canada, the Monetary Authority of Singapore. Like, I could go on. There's a huge list of these national regulators that have published warnings, announced investigations, otherwise cautioned investors in recent months about doing business on or with Binance. So one of CoinDesk reporters, Nick D, he wrote this excellent opinion piece suggesting that more than any other centralized crypto platform, this one, Binance, is quite the important one to keep an eye on, because whatever happens to Binance through the midst of this, it's going to signal how regulators around the world are approaching crypto. Not so much, decentralized cryptocurrencies like Bitcoin and Ethereum, but most definitely how they're approaching centralized cryptocurrency exchange businesses like Binance. Would you agree with that, Zach? Do you think that this is definitely one of the most important happenings to keep an eye on in the crypto world right now?
Yes, absolutely. I think the Binance story is a really big story that has yet to fully unfold. I think you're absolutely right. It's this sort of this middle layer of intermediaries who connect users to these public networks. And I keep going back to this thing from, I think it was consensus of this year, and it was this image of regulators need to find a throat to choke. And the throat to choke in this instance, when we're talking about public networks on which cryptocurrencies are exchanged, is these centralized exchange operators who need to comply at least with the letter of the law. And I think what we're seeing here is perhaps the broadest crackdown yet on a very large player in the market. Again, reminiscent of BitMEX, reminiscent of some other authorities, but arguably at a far greater scale. And that's why I think this is a really remarkable story to be following right now, as we try to figure out, again, what's the next thing to happen here? What's the next shoe to drop? Again, Bloomberg reported, I think in May, that there was a U.S. investigation underway. And I think everyone here in the space is really watching to see if that comes to pass. It's been really interesting to watch CZ respond to some of these allegations, and it's going to be interesting to see what happens next. So yeah, I'm certainly thinking it's a big deal. David, I'm curious for your take.
Yeah, so I think it's worth, because it's something that I think those of us who've been doing this for a long time can sometimes forget these basic things. And it's a great opportunity to reiterate one of the oldest and truest things in the space, which is, if you don't have your own keys, they're not really your coins. And right now, if you have tokens on Binance, it would seem like a good idea to start moving them onto some other storage solution. If you're just parking everything there, take it off, put it on a ledger or whatever, because, we've seen this story before, and I'm not saying that this is going to happen, but in previous instances where there have been regulatory crackdowns on these arbitrage exchanges that have no known address, they've eventually shut down all withdrawals in some cases, and people have lost a lot of money. So be careful about that. The other point I will make, though, is that this was a risk that was always built into the Binance model, because they were engaged in regulatory arbitrage, moving around, trying to not get cracked down on by any one country. And at that point, if you're doing that, maybe there's a good reason for it, as as CZ has said, compliance is a journey. But unfortunately, the journey can lead different directions. And right now, they're looking like they're getting the short end of the stick of their bet of not being based anywhere where they're clearly regulated by one entity. I think we need to move on. Who has?
Yeah.
Say that again, Naomi.
So I'm gonna.
I said I'm rooting for Binance. Here's to jurisdictional arbitrage. Here's to regulatory arbitrage. Here's to decentralization.
Yeah, Naomi's gonna like lift up and it'll be like a Binance tattoo, like next show, like CZ style. It'll be like, it was like
just a picture of CZ under my arm.
It'll be like Kusama tattoo, and yeah. She's got all of them. No, just to like add to that story a little bit, you also see other Asian exchanges or Asia-based exchanges suffering right now. So Huobi and OKX have also been caught in the regulatory ire over the last 9 months. So it's not just Binance, but definitely agree that Binance is kind of in the middle of that storm. We're going to talk about Lightning Network, which nobody talks about. And that was kind of the point of this really excellent piece from Jeff Wilzer. So Lightning Network is a layer 2 solution for moving Bitcoin really fast and really cheaply. It's been in development since 2015, and really like the technical works of it have been kind of out since like 2017 or so. There's 3 teams working on it, mostly led by Lightning Labs, which is Elizabeth Stark's production. And they're saying it's ready and it's good to go, and people need to know about it. And it's an interesting story here. Like I would definitely go read it if you have some time, because you kind of get a feel for the Lightning ecosystem and how underappreciated it is. I know from using Lightning myself, it's very fast, very quick. It's just like seamless. Had no issues with it, just buying coffee or whatever. But there's zero adoption of it, which kind of brings up a lot of other questions like, will Ethereum layer 2 solutions get adoption, or will people just not care? Will other tech projects coming out in the future, will they get adoption, or do people just not care? So it's interesting to kind of like look at Lightning within the adoption landscape. And just the fact that like you have these battles between different cryptocurrencies, and Lightning's always kind of touted by Bitcoin maximalists as a solution for moving Bitcoins cheaply. And people always deride it, saying it's not a viable product, but it is. People just don't understand that. And so at the same time, that makes it not a viable product because nobody's using it. So I want to toss it down to Zack to get your thoughts on Lightning.
Yeah, I mean, I feel like that headline could have run any time in the last 3 years, and that would be my only knock on this piece. It's still this perspective thing that is out there. Like, as you said, Will, it's not fully embraced as a vehicle for making Bitcoin payments. And I think it's also because, again, Bitcoin as an asset has sort of like established itself as the prevailing narrative as Bitcoin has risen in prominence over this last bull run. So I think it's really interesting. The technology obviously like represents the capacity for Bitcoin to be what it was envisioned as, that peer-to-peer electronic payments network. And should that come to pass, that'd be a really powerful realization for a money that is not confined by national borders. I'm going to throw this to Christine, though. I mean, Christine, I know you've kicked the tires a little bit on the Lightning Network in research capacity. Like, what's your sort of like top-line assessment of how far off we are from seeing Lightning be that revolutionary thing that it's always been promised to be?
From the last time I checked, the biggest concerns around the hurdles around reaching mass adoption was the technical limitations of the network itself. One of the reasons why people who look into Lightning more deeply than, the tweets that say, Bitcoin can be the peer-to-peer payment system it was always meant to be because Lightning, without doing any research, people who really looked into it, I think, realized for the longest time that developers of the Lightning Network themselves were cautioning users of their platform, cautioning against them considering the Lightning Network as ready for deployment, as being more than in an alpha or in a beta version. So last August, which is not that long ago, last August, they increased the amount of money you can send on the Lightning Network. But even then, the developers had said, please continue to consider Lightning as just the best way to move around petty cash, nothing to the extent of life savings. And then I think in October of last year, there were vulnerabilities discovered on the Lightning Network. That was very long-standing vulnerabilities, but it was just reported on CoinDesk in a way that brought them all together. These vulnerabilities included things like griefing, flood and loot, time dilation eclipses, pinning. I know these are all very technical terms, but you can read about it on CoinDesk. And I don't know if any of that has really, solutions for that has really progressed to the point where Bitcoin's secondary network for faster, cheaper payments is ready for the big leagues. I haven't seen much news around that, and that's the kind of headline I want to see. That's the kind of the stories that need to come out for people who know, like, understand Lightning, to think, man, this is ready for marketing to the big players.
So I have, I guess, kind of an observation, but mostly a question. My understanding is that Strike is building on Lightning and that it will specifically be implemented for use in El Salvador. I don't know whether that means, Christine, that there's like still stuff to be developed on the layer that needs to be in place before that's actually practical. But it does seem like that's a big, it'll be a significant push forward in adoption. And Lightning does depend on liquidity pools, so that'll be more liquidity if my limited understanding is even vaguely correct. So that's one step forward, at least, it seems like.
Yeah,
I don't know if you have a take on that, but that's ready.
Yeah, it's great to see these businesses building on the Lightning Network. I worry whether or not the technology of that protocol is ready for the kind of applications and the kind of services that they want to deploy from Lightning. But I guess we're about to see, I mean, with Strike and El Salvador saying that Bitcoin is now legal tender, I think we're definitely gonna see the innovation either rise to meet the occasion or crash and burn.
Will, give us your closing thought on Lightning before we wrap this thing up.
Closing thoughts on Lightning.
Closing thoughts.
Yeah, no,
Last
I definitely
word.
Echo Christine here. I think there's a lot of technical stuff that needs to be discussed with Lightning. And I think it's also interesting to note, looking back 2016, 2017, that the Bitcoin network had this huge civil war around implementing Lightning. And 4 or 5 years later, they're saying it technically works, but there's no adoption. So it's like those past decisions is it going to continue to haunt Bitcoin, or is it going to help fulfill Bitcoin's dream of becoming truly decentralized money?
Cool. Thanks so much for that, Will. We have a baby Steve. We have a
Anytime.
Steve appearance. Can we see Steve? It's good luck for the baby Steve bags. Baby
There's a
Steve
chicken salad right
to the
here,
moon.
so he's going a little nuts.
Got it.
Yeah.
Thank you, Steve, for blessing us with your presence today. We really appreciate you. Naomi, David, Christine, Will, good Tuesday show, folks. We'll see you on Wednesday with The Hash, where we will be back with more crypto news for you. Have a great day. We'll talk to you soon. Thanks.
Yeah.
Bye, everybody.